This week, we're going to talk trade, and we'll preview next week's supply and demand numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is Charley Martinez, an ag economist with the University of Tennessee. Charley, great to have you back.
Pleasure to be back, Meghan. It's always interesting to catch up with you, and this week was no different.
Hey, there is plenty of crazy things happening right now in terms of markets and what's going on with prices. We'll get into that. We'll also talk a little New World Screwworm as well. But I think it's probably a good way to start to recap another wild and crazy week when it comes to the markets.
Yeah, every time, in prepping to sit down and talk with you, I always kind of check back to the previous numbers from whenever we were together. And every time I do it, it's almost like a wow. And so this week, it was another preparation of wows. And so on the live cattle prices, they actually closed at $237.32, which is up $7.38 from last week. When I first saw that, I was just like, let me double check to make sure, because, you see those kind of numbers. It's like, wow. June live cattle prices closed at $218.72, which is up $3.24 compared to a week ago. And then the August cattle future prices closed at $310, which is $11.17 higher compared to last week. And, that contract in itself is one of the ones that just really sticks out, because if you're paying attention to those markets, it was really Wednesday, Thursday, where they just started gaining steam on the boards. And, I think there's some, expectation of where the market's going to be going in the next quarter of the year. And I think we're really starting to see that come to fruition. Choice box beef was at $365.71 at the end of the week, which is up just a moderate 78 cents from last week. Select box beef was at $356.94, which is up $3.72 from last week. And then on the pork side of things, the pork cutout closed at $107.82, which is up 3% or $3.33 from last week. The national base hog carcass was up to $95.43, which is 2% higher than last week. And the June lean hog futures closed at $102.60, which is up just 1% or $1.26 from last week. So on the hog side of things, everything was up. But, when we talk about magnitude and kind of just some wild numbers, the beef side was really gaining some steam this week.
Some of these prices, we keep talking about unprecedented price levels. And do you worry that at some point, just on the trajectory that we've been, that it loses its luster, and maybe producers aren't as diligent in their risk management efforts because they're getting comfortable with these prices continuing to push higher?
Yeah. So whenever we start talking about, are we reaching a threshold? I always kind of go back to the 2013, 2014, 2015 timeframe. And, relatively speaking, we had seen prices that were all-time highs, just like we are now. And it was, hey, these are going to be new levels. We're not going to go back down again. And simple, supply and demand would indicate that is not a true statement. And so whenever prices really started to tank in 2016, people were starting to see like, hey, cerebus paribus, supply and demand is going to happen. And I think right now, we're at times where we're seeing record high prices, but we're not in the same environment when it comes to cost of production, the demand and things of that nature. And so I think whenever we talk about, are we reaching the level, or, at what point do we run away consumer demand? All signs right now show that we still have relatively really strong demand. But I kind of also feel to a certain extent that we're playing with house money, in a way that we are continuing to see these prices. It's, getting better. It's getting better. We're getting ready to prep for the fall run. And if the fall run was to hit and we lose consumer demand in the supply chain, and then we have that trickle down effect throughout the supply chain, and we see prices go lower, then that's when we're going to see these ultra high prices that we're experiencing come down. And is it going to come down at a rapid pace, or is it going to come down at a slow dripping pace relative to our supply? And so, we know that we're still in tight supply, or we're still in a realm of tight supplies. But if demand was to really, turn around and go the other way because prices run them off or run off the average consumer, we could see prices repeal or go down quite, in a quick fashion, because those dollars are going to start making sense, from the retail side to the wholesale to the packer to the feed yard to the cow calf producer in a pretty timely fashion. And so it's more of, we're going to find a threshold. I don't know where it's at, and if anyone can tell us, that'd be awesome. But I think it's very hard to find people that have the crystal ball that knows where it's at. But all that to say, with these really high prices, I would hate to be in the boat where you are expecting the prices to be there. You go into a marketing window with no risk management, and then the prices are to tank because of some unforeseen reason. And then you're stuck with prices that are 20, 30% lower than what you were expecting. And that does not cover your break even. That can really hurt your profitability. And during a time when we see these prices, that would be really unfortunate. So risk management, to me, becomes even more imperative.
We're going to talk slaughter numbers. Obviously, holiday shortened week last week. So as we look at that comparison, keep that in mind. But we're also still seeing a slowdown when we're looking at slaughter year over year for both cattle and hogs.
Yeah. So cattle slaughter for the week was at 582,000, up 105,000 from the week ago. Again, as you mentioned, Megan, it's because of a shortened holiday week. And then we're actually down just under 28,000 at 27,797,000 head compared to a year ago. And year-to-date cattle slaughter is down 5%. Relatively to the last time we were together, Megan, it's actually kind of come down. I think the last time we were together, we were down 6%, a little over 6%. So to kind of close that gap down to 5%, that was kind of interesting for me to see. Hog slaughter for the week was at 2.36 million head, up 220,000 compared to last week. Again, with the holiday shortened week last week, we would expect that. But compared to last year, it's down 28,000, about 28,000 compared to a year ago. And then year-to-date, hog slaughter is down 2%. That 5% on the cattle side and the 2% on the hog side, when last time we were together, those numbers were actually larger. So to see that, the gap tightening a little bit was kind of interesting. If we think about what we're going to expect in those reports next week, that we'll talk about in a little bit, but that'll be something to kind of watch to see is that going to hold par, or are we going to start seeing that number increasing here in the next couple of months.
International trade or trade data was out this week, delayed actually from when it was supposed to be, which was the 29th, I think, 29th. Of May. As you take a look at this, I would assume there's a couple of factors. Trade rift with China not being resolved at the point when this data is. What are some other things that you're seeing in some of those notable numbers for both beef and pork?
Yeah, so the report, I was expecting you and Kenny to cover that last week, and then it didn't come out, and then so we got it this week. And so, lucky me, I'm the one that gets to look at it, because the numbers that are in there, for the folks that don't know about the international trade report, it tells us specifically for our listeners, the beef and hog folks. It tells you what we're exporting, what countries that we're exporting to, what countries we're importing from, and then also the tonnage that we're utilizing, or that we're sending or receiving. And then there's also some live animal imports that we can see as well. And so, we'll talk about New World Screwworm in a little bit, and we can see some of those numbers from Mexico side. But in the international trade side of things, when we talk about the exports, April beef exports totaled 474,547 metric tons, which seems like a lot. Compared to a year ago, it was actually a difference of 147,118 metric tons. And so if we think about that, we're starting to see some differences compared to a year ago whenever we start thinking about how much we're actually sending out. So with the 147 being positive compared to a year ago, some of that could be seen as positive, right? We're finding some trade partners, but if you start reading between the leaves in terms of month-to-month change, we were actually looking at exports, or let me rewind. When we start thinking about the imports, we start seeing that we're up 147,000. We know that that's going to be expected, right? With the tightening of supplies, we're going to need some type of product to help make our trimmings, or bring in trimmings to make in our ground beef and things of that nature. But then the big key is we look at exports. Exports totaled 237,216 metric tons. So we have a little bit of a difference there, if you would, but down 22,307 from a year ago. But interesting enough is when we start looking into where are these products going or coming from. On the export side, exports to China declined nearly 70%, and shipments also trended lower to Mexico, Taiwan, and the Middle East. Those results, or the differences, were kind of offset by larger exports to South Korea, Japan, Central and South America. But in total, we did increase a little bit of our trade deficit when it comes to the beef side. And so if we just kind of unravel that for a second, we're sending less to China, and at a 70% clip compared to what we were a month ago. And if we take that number, some of that was offset by sending it to other trade partners, but we still had a net loss on exports, and we're also importing more. And so our trade deficit got bigger on the beef side of things. And so, this report was the first one that we see with April numbers. And we know that we've had the trade dispute happening for, roughly a month and a half to 2 months, depending upon what country you're negotiating with. But these numbers are the first indication as to what's the impact for those industries on the international market. We can see weekly, but this monthly one is pretty interesting. On the pork side of things, go ahead.
May I ask a beef question? One of the challenges, I'm assuming, right, with beef exports to China, not just the trade rift and those conversations, but aren't there still facilities that need to be reauthorized that were part of phase one? So technically it's shut off because we don't have those facilities that are authorized to export to China, and that work needs to be done as well.
Yeah, so that's a good nugget there that I failed to mention there, Megan. So kudos to you on that. But yeah, I mean, these are things that some people might see it and think, oh, that doesn't really mean much. But when we start talking about like international trade, and we know that international trade for the beef segment has a lot of impact. Those are things that have to be taken care of that can, in the long run, have some impact on the product and the value that we're sending across or importing here to the U.S.
And so now we can go back to pork. Sorry about that.
Back to regular programming. April pork imports totaled 94,954 metric tons. Down 3,938 metric tons from a year ago. Exports totaled 582,921 metric tons. While that is a large number, it was still down 72,968 from a year ago. Kind of a similar story. Exports to China, which are mainly pork variety meats, declined 35% from a year ago. Shipments were also lower year over year to leading markets like Mexico, Japan, and Canada. But April was also another outstanding month for pork exports to Colombia and Central America. Those two countries in particular are somewhat on record pace. And so, again, we lose these channels, or we lose the partner in China for the pork side. Well, those folks are going to still find homes for that product. You and I have joked in the past, at some point, you might lose this one trading partner or this one country as a trading partner, but you still got to do something with the product. And the companies are out there finding new destinations and finding partners that are willing to take in U.S. product. And so the question will become, if we go back to levels with China in terms of trading a lot of beef and pork to them, what happens to some of this new demand that we found? Are they willing to pay for the product in the future? Those are kind of things that make international trade really fun for trade economists.
I would assume also, Charley, the diversification of markets, right? We learned something during the first trade wars, that we can't have all of our eggs in one basket. And groups like the U.S. Meat Export Federation, plus other checkoff organizations that work to grow demand for product, have done a great job identifying new markets that we can ship product. And there's got to be value in that in terms of adding value to a pork carcass or adding value to a beef carcass, which helps producers in the long run.
Yeah. So, it's one of those deals that diversification or a diversified portfolio for investment for the people that know investments is always a good thing because whenever things that are adverse, and if we're thinking about investment portfolio, recession, or anything like that, you kind of have some type of risk management in that portfolio because you're diversified in the way that you're, kind of exposed to risk or you're generating revenue. When we talk about international trade, diversifying that portfolio is no different, right? Like finding partners that are willing to take in your product, and it could be something in particular. We'll just use bacon, for instance. They might have always wanted U.S. bacon, but just couldn't compete in the market, or were never approached with an offer or a deal or an opportunity to have a deal done. And now they're getting the opportunity, and they're like, yeah, let's, we can work something out. It could be something that simple. And so diversifying and finding new homes for products is never going to be a bad thing. I mean, look at South Korea and Japan, for instance, on the beef side. Those countries have become really strong trading partners because of, things like Beef Checkoff going and doing promotions and things of that nature. And now, to a certain extent, some of the average consumers in South Korea are no different than the average consumer in America. They like the ground beef. They like their thick cut steaks. And so that's always going to be good to think about, having a home for the product and having trading partners internationally. That increases demand. Increased demand equals increased prices. And so when things go bad, it's still, ceteris paribus, demand will, unchanged still is a good thing.
I would assume also all trade is not created equal, right? We talk so much about concerns about a trade deficit as it relates to agriculture, but that's not telling the full story, right? Because we're importing some higher value products, I think cheeses, specialty things, wines, those types of things, and we're exporting some products maybe that aren't as high value. Does that kind of fill in the rest of the story when it comes to talking trade deficit and what that means for markets and support to markets as well?
Yeah, so I think what you're asking is something that is always of interesting conversation with one of my colleagues, Dr. Andrew Muhammad here at the University of Tennessee. When we talk about ag trade deficit, he's quick to always point out that if you look at like wine and spirits and you look at, they're a part of agriculture technically when it comes to the trade deficit. They make up a large line share of what our trade deficit is internationally because of we're not sending so much wine and spirits to other parts of the world anymore. And he's also quick to mention, ag is just one part of the story, right? There's international trade in all types of other sectors. And yeah, if we take ag trade and we just focus on it and we pick one little thing, yeah, it could look bad. But in reality, what we could deem as bad, if we really look at it, wine and spirits and beer are making up a big chunk of that deficit or that negative sign that we're looking at. But also in the whole, other countries can invest in trade, and America does the same thing and trades in other ways, whether it's exchange rates or money in the other countries. It could be technology, it could be infrastructure in other ways. And so yeah, agriculture from if you want to take a snapshot and take one story out of it, it could say, oh, it's it's not looking that great. But when you really look at it in perspective, not only within agriculture, and we look at wine and spirits, but if you look at it all together, agriculture is still a segment within this large economy, international trade market with to other technology and other segments or other industries. And so yeah, it's one of those deals that I wish maybe that's a good idea for us in the future, Meghan, is to bring on Andrew Muhammad and talk about it, because he really can make it simple. And you'll leave the conversation going, oh, man, yeah, it's really not that bad, actually. But, if you just look at a number, it could be bad.
There's always more to the story, right?
Right.
I want to talk a little New World Screwworm specifically. We talk about the cattle coming in from Mexico, that is still at a halt. But one of the I think you bring an interesting perspective. Yes, you're at the University of Tennessee, but you also have cattle in Texas and in that part of the country. So as you look at this risk and what's happening right now, what are your thoughts on the new world screwworm and how it's impacting the cattle sector, not just in Texas, but really along the southern border?
Yeah, so it's somewhat of a blessing and a curse to be still active in agriculture and especially in the cattle side of things. And in talking with my family, I'm also the son-in-law to a veterinarian and the brother-in-law to a veterinarian in South Texas. And so when we talk about cattle and specifically New World Screwworm, it's always interesting to kind of get their perspective on things. And what they're talking about right now is that it's a real thing. Like New World Screwworm is something that could spread around South Texas. If not, if it does come across and wants to, go from host to host, it could have a large impact pretty fast. And when we start thinking about that, it's, we're in a time of cattle prices being all-time highs. It would be one of the most unfortunate things for a New World Screwworm to come in and wipe out the cattle population that we have. And so when we have those two extremes that, people are starting to think about along the border, they're essentially going to be the first cattle that get hit, right? I mean, if New World Screwworm comes, it's going to be all the cattle along the border, and those people are going to get affected the quickest and the hardest. And so from that perspective, it's how fast can it come? How fast can we get it under control? What are the protocols in case it does start spreading? Are we going to have to look at, are we going to have to look at cattle quicker or more often? And what does that look like? Does that increase our costs? And things of that nature is what the conversation is. And it's a real, problem that can become prevalent.
I would assume producers in that part of the country remain vigilant in scouting, examining, looking for any signs. And we say this to say it's not here. It is still, last reported, was in parts of Mexico, but was moving north. So, is that just, those animal health checks becoming more prevalent for producers in that part of the world?
Yeah. So, with us, it's more of, hey, we're going to start looking at the cattle more often. And, that's going to have an increased cost. Are there other ways? What other medications can we provide to an animal that can be preventative? But there's also a cost associated with that. And, up to a certain extent, cattle are not looked at like they once were back when we first had New World Screwworm, a long time ago. And so it's like, do we need to start working on protocols for animals? And do people need to start thinking about that? Another thing that, I kind of thought about that I heard a comment was, if we shut down the border, just do producers in Mexico stop doing preventative things for New World Screwworm? Because if they're not able to send the cattle across to Texas or Arizona or, across the U.S., well, then why would they do anything that can, be preventative for New World Screwworm? And so those are kind of things in the conversations that I hear about that I'm like, that maybe there are some unintended consequences of that as well. And so I think it's such a interesting conversation that I guess it's a blessing and a curse also as an economist to be, in the position to be thinking about it. But in the grand scheme of things, these are people's, livelihoods when it comes to the cattle industry that, could be at risk and be at risk pretty quick. And so those are, it's not just something simple as, it's another insect. I mean, these are things, New World Screwworm could have some long lasting and immediate impact on producers' bottom line and profitability.
Charley, as we wrap up today, supply and demand report out next week. As you take a look at that, I would assume maybe watching a little bit in terms of thinking input costs, feed costs, but then also what USDA is going to do in terms of beef production and pork production long term.
Yeah, I think that's going to be the biggest thing. I think about a month ago was one of the first times we were talking about reports that got adjusted because they wanted to make sure, the government wanted to make sure, and the USDA wanted to have a caveat that, hey, this is projections with the expectation that cattle are not going to be coming from Mexico because of New World Screwworm. all live animals are halted, or live animal imports are halting. So I think this will be one of the reports that kind of gives us some more indication as to what they're feeling for the next couple of months. If there's a statement in there of like, hey, we're expecting, imports to resume in the next couple of months, that'd be amazing. Or if we're expecting the next month again to hold still, where we're not bringing in any animals from Mexico, that's just as much or just as valuable as information as anything. So I think one, is there a statement or any comment about New World Screwworm and the border, something that I'm looking for. And then also knowing that we have a variation in supply again because we shut off the trade or the border with Mexico, and be watching that. Of course, the prices are going to be something to also kind of monitor. So it'll be a report that I think I'm kind of excited about, and also just because this past week we didn't have too many fun reports that are of interest for our producers.
I think Josh gets it next week.
Lucky Josh.
I'm sorry. I only make the schedule, right?
It's right.
Charley, it's great to see you.
Awesome. Good seeing you.
See you. To have our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens twice a day in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.